All right. Here we go. We're going live again. I mean, what a day this is. What a day we're having, right? What a beautiful day to be alive. Talking finance all day, going live all day, right? Here. Last time I totally forgot to start the live presentation for everybody that was on Instagram. I screwed it up. I felt bad about it because I sometimes my Instagram doesn't do all that great anyway. I have no idea why. If I don't have it set up the right way, if Instagram's not a great place to talk finance, to be honest with you, I don't know. I really don't know. I have no idea. Um, let's see if we can get a couple people to join here before I get going. I usually don't wait around and I just start. I just get started because I started doing lives quite a. I mean, honestly, it's been 6 months or so, definitely 3 or 4 months of doing hardcore lives, and I find that live is a fun way. I like going live. I think my biggest problem is that it doesn't seem like, and maybe I'm doing it wrong, that there's not as much interaction as I'd hope there'd be. I mean, when I go live, the whole point of being live is so that people can ask me questions because I can sit here and riff on finance for the next 5 days straight, right? But if I can communicate with somebody, if I can go back and forth with somebody and they can ask me some questions and I can answer some questions, this is like a lot more beneficial to everyone involved. I haven't seen a ton of that on live, and like I said, I've been doing this for about 6 months, but I'm not going to wait. All right. So what we're going to talk about is we're going to talk about leverage in your investments. So one thing that anybody who's watched me live is going to know right away is that I know everybody wants to jump into the investment aspect of everything, because that's the sexy part. Hey, where's the most money made? What are the stocks to own? What crypto should I own? What coin should I own? Should I own Bitcoin? What's the difference between Ethereum, right, and Bitcoin, and so on and so forth. That's all the sexy stuff that everybody always wants to talk about, which is great. But if you know me and if you listen to me at all, you're going to know that I'm going to tell you before you do any of that, if you do not have a solid financial plan put together, you're making a giant mistake. Okay. A giant mistake that you are going to mess up because one of the biggest mistakes in investing, one of the things that will get the best traders in the world, the best investors in the world, what will get them is their emotional attachment to A, their money, or B, what's going on, period. Because your emotions are used against you in investing. Because I said the new president has his own Bitcoin. What are your thoughts in it? So I get Trump has a coin, huh? He has his own coin. He has some sort of a currency. I wouldn't get involved. Look. I shouldn't, tell you what to do if President Trump has a new coin, because I don't know anything about it, but what I would tell you is I wouldn't necessarily jump on the bandwagon. He has a media company, and before a lot of the stuff that these guys do, it's like Dogecoin with Elon back in 2021, that kind of era. And so I guess Trump maybe is starting a coin. I mean, could it go gangbusters because everybody loves Trump so much? I mean, maybe. What is it? DJT is like Donald or Donald Trump Media, DTM. Anyway, he has not just a coin, his own crypto. Yeah, I'm not surprised he has his own crypto. I'm sure he's going to jump into that space. You know what? Before I even answer that, I would have to take a look at it and see how legitimate it really is. Right now, over in the crypto space, because I said what I firmly believe in wholeheartedly is Bitcoin itself. I'm not telling you that Bitcoin isn't going to retrace from the levels it's at now. What I am telling you, or that I believe that, but what I am telling you is I do believe in Bitcoin. You know what I mean? Bitcoin is that I can wholeheartedly believe in that. It is the gold standard over there. It is where ultimately our currency has to go. We have to head over there. Smart man, thank you, because I said we have to head over into that world. And actually, you know what? I think my next live, because I said I'm going to do on crypto. I'm cash till the day I die. I trust in me. Yeah, the only problem with cash, because I said, is that it gets eaten up. Like if you're investing, there's other ways to invest if you don't believe in the stock market or the bond market, or commodities, right? Or gold, oil. If you don't believe in crypto at all, there's other places you can put your money. The only thing I can tell you about cash, because I said, is it's going to get eaten up. Like, it's going to slowly disappear on you. It really is. And that's in today's world, and even in yesterday's world and the world before that, you've always had to invest your money in places. I don't know how old you are, but a lot of you might remember the movie Wall Street. I would hope. Maybe not the first one with Michael Douglas. Maybe you remember the one with Shia LaBeouf, Wall Street, Money Never Sleeps. They talk about something, and I can't remember if it's in the first Wall Street or if it's in the second one, but they talk about the great tulip bubble. I'm not in any market other than local real estate. I'm 46. Oh, cool. Well, I'm 45 because I said I'm 45. So it's great to meet you. So you do know Wall Street. So it is far back, and this is why I can tell you you're involved in local real estate. That's fine. I will tell you, like any market, the real estate market right now, to me, it looks like it's probably in the worst trouble. And I'll tell you why, because I said, so why do I think the real estate market is probably in the most trouble? It's pretty simple. The so a lot of people don't know how inflation happens. Wait, let me finish the Great Tulip Bubble story, and then I'm going to talk about real estate, what I think about it, and why I think what I think. So the Great Tulip Bubble, this is hundreds and hundreds of years ago, right? This is like long before you're talking about stocks and bonds or real estate or whatever. It's like castles and maidens, right? It's the Great Tulip Bubble. At one time, one tulip bulb could buy you a home. And then all of a sudden, in one day, thousands of tulip bulbs hit the market. Supply and demand, right? So demand stayed constant. Supply was overwhelming. And what happened? What happened when demand stayed constant and supply was overwhelming? What happened was the great tulip bulb crash. And that's one of the first bubbles in history. For those of you that don't know any better, it's the tulip bulb bubble. You should look it up if you don't know anything about it. There are plenty of bubbles throughout history that you can take a look at. And that one was the first major bubble that we have in recorded history. And why is that important to you? Because what that's telling you is, as long as you can go back hundreds and hundreds of years. Those that have been successful have done two things, right? They always own and run their own businesses. Okay. Or in today's world, if you're went some Ivy League school and you become a CEO of a major corporation, obviously that counts. But they own and run their own businesses, and they invest their money. And they invest their money across a broad spectrum of assets. And the reason that they do that is because they have to beat inflation. They know that prices will rise. Why will prices rise? Well, it's really simple. Now we're going to jump into the currency conversation, and we can like intertwine that with real estate. In 2021, what happened was we had the COVID relief fund, $1.5 trillion. Now, what we did with that $1.5 trillion is we increased the US currency in circulation by 50% in 1 year. Okay. So if there was $100 in US currency in the market, we threw 50 more on top of it. What did that do? Well, that gave people more buying power, because then that money is sent out from the banks. It gets into people's hands. People have more buying power, and people in this country like to spend their money and they like to buy things. So, what that does in a market like real estate is effectively an auction market. So is the stock market. So is the crypto market. These are auction markets. What something is worth is what the next person is willing to pay for it. Plain and simple. And that's why supply and demand come into play, because if demand stays constant, but you have a vast supply, it can overwhelm demand, and that drives prices down to a point where demand increases, and then demand overwhelms supply, and then that drives prices up. All right. So, why do I think the real estate market is probably one of those areas that's really sketchy right now and really scary? I'll tell you why. Because we don't even know how much real estate is on the market at the moment. That's the truth. There is so much corporate ownership of real estate that they're letting sit and that they're pulling off the market because they have the pockets, the cash flow to withstand not making money for several years. So we don't even know how much is on the market. We have an Airbnb crisis that's absolutely going to hit. Everybody bought into Airbnbs. You're seeing it in places like South Florida. You're seeing it in places like Austin, Texas right now, where these people that bought these Airbnbs, they have to sell them. They're not making the money they were making before on the Airbnb. Now they can't afford the monthly payment. Now, and let's remember that most of these people bought those homes with variable loans, adjustable rate, variable mortgages. Why did they do that? Because it was an Airbnb, it was an investment property. They thought they're going to collect the income from the Airbnb, and then at some point they're going to sell it and they're going to make a profit. Well, they've been turned upside down on their heads. They've been put on their heads, right? That's just a fact of what has happened. So now all those homes are going up for sale. So what we're seeing right now, we have two problems in the real estate market. One problem is affordability. What happened when all that currency got pushed into circulation in 2021? When we increased the amount of US currency in circulation by 50% in 1 year, which is absolutely unheard of, never done in history, not even anything close to that ever done in history. When we did that, what we did was we artificially drove prices up. So, what happens after we artificially drive prices up is the Fed Reserve has to now step in and it has to pull that money back out. Okay. It has to slowly pull that money back out. And what the Fed tries to do is pull the money out in a way that it doesn't collapse a real estate market, that it doesn't send us into a tailspin, into a recession, but it has to pull the money back out. Otherwise, you stay at these inflated prices. And then the younger generations never stand a chance of making it in this country or any other country because this was a global phenomenon. All right. So, real estate has an affordability issue. Right now, real estate compared to a year ago needs to drop about 30% for it to be affordable. Now, a year ago, when it was affordable 30% cheaper, that's probably 2 years by now, I suppose. Probably a couple years ago at this point, because real estate has been in a significant downtrend over the last year. But real estate needs to fall another 30% from a couple of years ago to get back to affordability. But you have another problem because now you have skyrocketing interest rates. What do skyrocketing interest rates do to affordability? It makes affordability even more difficult because if you're getting a mortgage at 3% or 3.5, and now you're getting one at over 7, you don't need prices to fall 30%. You need them to fall 55% just to get you back to where they were affordable 2 years ago. And this is why I say that real estate looks like a very difficult market to me. I don't see how you remedy that situation. I don't see how that situation remedies itself without the price of housing dramatically falling. Because at a certain point, the baby boomers can't own everything and they can't live forever. At a certain point, especially in the United States of America, we will never settle for being renters. We're never going to settle for someone telling us that we don't get to have the American dream. And you shouldn't settle for that. Okay. You should not settle for that. Let me tell you something about baby boomers that isn't often talked about. 80% of their wealth and their retirement income stems from their home ownership. Let me say that again. 80% of their wealth is derived from home ownership. If 80% of their wealth is derived from home ownership and you don't have a shot at owning a home, what does that do to your overall wealth by the time you go to retire? There was an article that came out a few days ago, ABC, NBC. I saw it on Apple News. The median new first-time home buyer hit their age. The median age of first-time home buyers is at historic high levels, 38 years old. You for the median age to be 38 years old. Do you understand that first-time home buyers are ranging now? You have wealthy 20-year-olds, which means your median age is probably somewhere. The reality is 42, 43, 44. So when someone's out there talking about Generation X, that's me at 45 years old, we have had it easy. You're crazy. Most people that are part of Generation X don't own a home. They're just now starting to be able to get them. And the generations below us have it even worse. So if the median age of a first-time home buyer is 38, and here's another nice caveat for you on top of this, the way they made their down payment is historically unique too. Do you know where the down payment came from? It's the first time in history this has ever happened. So we have the oldest first time home buyers, and their down payment is coming from inheritance. It's coming from inheriting money. In that same article, you can read EMTs, police officers, blue collar workers, which is, EMTs, police officers, construction workers, electricians, you just jobs that make the world go round. That article said that with the way the real estate market is now, they'll never be able to own a home. They'll never be able to own a home. Now, I do have news for you. They will be able to own a home because things can't last if that's the actual setup. It won't last. It will not last. Not with that setup, not a chance. Okay. Now, why are we talking about real estate? Well, first off, because I said joined and he asked about real estate. But the second reason is we're talking about leverage and investing. So, and we want to talk about the positives and the negatives in investing. What's that say? Purple Sunkissed. Purple Sunkissed. Why what? I'm being asked a question. Why? Because I said welcome back. Purple Sunkissed. Why to what? Why what? Bill. Hey, Bill. Good to have you. Great to have you. Thanks so much. Okay, I'm going to go on. If I get a response to that why question, I'll continue. So, leverage and investing. Why are we talking about real estate? Because real estate is one of the great ways to leverage your money. It's an amazing way to leverage your money. Now, what do I mean by that? All right, I'm going to use fake numbers just to keep everything really simple, but this is what I mean. So, you have this $500,000 house. You have saved up $50,000 to put down on this $500,000 house. You put 50,000 down. The mortgage nowadays, that would probably cost you 3,600, 37, 3,800. Given today's rates, maybe even slightly more. I'm not going to check on that. Feel free if you want to. You put 50,000 down, you're paying 3,800 a month, and you have this $500,000 house. Now, nationwide, the average for real estate to appreciate per year is about 4.5%. Okay, you have some places where it's less. Some places like California and New York, where it's more, where it's closer to 7 and 8%. So you have $50,000 you've put down on this asset, and it appreciates at 4.5%. We're going to call it 5% because it's easy math. What's 5% of 500,000? Everybody, 25,000. So it's going up 25,000 a year. You own this piece of real estate for 10 years. Okay, you're making 25,000 a year in gains on the appreciation of this real estate. For 10 years. That's $250,000. So what you did was you leveraged a $50,000 down payment into a capital gain, into a profit of $250,000. 500% return in 10 years. Show me a stock market or show me a crypto market or show me any market where you're going to do 500% on your money in 10 years. While you're living and raising your family in that home. That is the positive effect of leverage. That's leverage. All right. Now, I do realize that you're paying your monthly mortgage, right? So you are paying a monthly mortgage on that. Teach people about compound interest. That's why I'm liquid for life. Teach people about compound interest. So compound interest is an interesting subject. I do talk a bit about that in my previous video, so I'll touch base on it because I said I'll touch base on that because I said, "What's your real name?" I'll call you a name as I speak to you instead of your handle. Let's talk about compound interest. So we just talked about leverage. That's the positive side of leverage. And after I discuss compound interest a little bit, I am going to go ahead. Hey, Tim. Good night. Thanks, Tim. So Tim, we're going to talk about compound interest. So I just discussed the positive side of leverage. After I discuss compound interest a little bit, what I'm going to discuss is the negative side of leverage. And we're not going to talk about real estate when we talk about the negative side of leverage. But that gives you an idea of what the positive side of leverage is. You took $50,000 on a 5% gain in your home over 10 years, you turned your $50,000 investment into 250,000. Granted, you were paying that mortgage every single month, and I'm leaving that out. So that's not like complete cash flow, but that's not really the point. Okay, compound interest. The best way to talk about compound interest is the rule of 72. I talk about this all the time. The rule of 72 simply states that you take the number 72, you divide by the percentage of interest that you're earning on something, and that number is how often your money doubles. That's what compound interest is. So if you're earning 10% a year on your money and you divide 10% by 72, that's 7.2. That means every 7.2 years, your money doubles. Okay. So let's just say that it's 7 years that your money doubles. Watch how interesting it is. So you're Tim and I's age, you're 45 years old. You have 30 years ahead of you in investing. Okay. And every 7 years, your money doubles. That means you have about four flips. Your money's going to roll four times. So if you're our age, if you're Tim's age and my age, and you have just $250,000, you're going to have four flips by the time you are 75 years old. You have 30 years to go, right? If you're earning 10% on your money. So if you're earning 10% on your money, your 250 becomes 500, 1 million, 2 million, $4 million. 250,000 becomes $4 million without you doing anything except earning 10% a year. Now watch this. This is the effect of compound interest. Now, let's say that you double that return and make it 20%. So now you're going to earn 20% a year. So your money's going to flip every 3.5 years, not every 7 years. You have 30 years to go. So you have about 8 flips. You're going to have 8 flips now instead of 4, right? So what do we say? 250. So 500, 1 million, 2 million, 4 million, 8 million, 16 million, 32 million, $64 million. An additional 10% on your money each year has you go from 4 million to $64 million in the exact same time frame. The exact same time frame, you take 250,000 to 4 million by simply getting a return of 20% per year. You take 250,000 and it's 64 million. That is compound interest. That's what Tim's talking about. Now, I'm interested to know why you're liquid for life, and like liquid as in cash permanently, Tim. If you know what compound interest does, so if you want, let me know. I'd love to hear it. I always talk about compound interest as a reason to invest, but you're talking about it as a reason not to invest. So I'm interested to hear why you think that. Um, and also, so once you tell me, I'll respond. We're talking about leverage, and we were just talking about how real estate is a great way to leverage your money and to make more money with your money using leverage, right? Let's talk about the downside of leverage. So people run to currency markets for leverage. They're now running over to crypto markets for leverage. They run to futures markets for leverage. They run to options markets for leverage. Now, what I can tell you is what I've seen. And the reason that I've seen people running to these leverage products is that they believe that they can make more money by leveraging their money to produce more money. I buy ugly houses, fix them with cash, and I get paid rent and cash in perpetuity. There you go. I'm with you, Tim. That makes perfect sense to me. Buying ugly houses, fixing them up with cash, and get paid rent in cash forever. That makes sense to me. I make sure I don't spend more than I make, and you never should make more than you should never spend more than you make, Tim. And hopefully you're saving some too. I mean, you're my age, so I'm sure that you are. A lot of people don't, but you really should. But well done, well played, Tim. I agree with you. Listen, there's guys out there that tell me I don't invest in anything but my business. And the only thing I tell them is they are investing in a concentrated position. Because if that business doesn't work for any reason, they are. And you don't want to end up in that position in your life, believe me. I've been there once. I had a failed business. I put everything into it. And I don't even know that it was necessarily a failure of the business, more so a failure of me not knowing how to pivot that business. But either way, it failed and it wrecked my life. That is not a fun thing, believe me. So leverage. Now let's use leverage in the opposite way. Let's use it in the opposite way. The way you're using it in the currency markets, the way you're using it in the crypto markets, the way you're using it with options. And this is for those of you out there who are not ex floor traders. You're not ex market makers. You're not ex trading professionals, right? It's you guys that want to learn how to do this stuff. And I'm not telling you can't learn it, but you have to put the time in educating yourself before you touch this stuff. And here's why. You have, let's just say you have $1,000, and most of these guys are going to use a lot higher leverage. They're going to go 200 to 1 because they're talking about currency markets, but we'll go 100 to 1. You have $1,000, and someone tells you, yeah, but if you take it over here, you have $100,000 that you get to trade. Now, check this out. If you have $1,000 and you leverage it 100 to 1, and so you can now use $100,000 to trade, if you get a 10% move, guess what? With $1,000, you just made $10,000. Woo! That is amazing. And I hear people talk about that all the time. What I never hear anyone talking about is reality. What happens if it goes 10% against you? Do you think your $1,000 is now $900 because that's 10%? No, 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 my friend. Leverage works the other way too. So if you have $100,000 and you use 10%, you still lose $10,000. You now have to pay the firm $1,000. You have to pay them $9,000. You lost your 1,000, and now you have a bill of 9,000, my friend. Leverage goes both ways. So if you think that you're going to go in and you're just going to, and these 20, I love looking at the 22-year-old kids talking about leverage. If you take $500 and you could trade 100,000, if you take $500 and you try to trade 100,000, I give you about 2 hours before you have a $5,000 bill on your hands. That's no joke. I'm not being a jerk. I'm telling you, 2 hours, you owe 5 grand. You have no chance, zero chance. Now, there are ways to learn this stuff, and I have friends that teach it. They are ex market makers, they're ex floor traders. I don't even teach it because that's not what I specialize in. What I specialize in doing is helping people avoid major bear markets, investing for the intermediate and long term, avoiding major bear markets, and averaging 20% per year, which allows them to flip their money every 3.5 years. Every 3.5 years, their money's doubling. They're averaging about 20%. They're avoiding major bear markets. I show you how to identify market tops, market bottoms. I show you how to identify price. Where should price return? In what time frame should price get there? This is what I teach. All right. And I teach people to start in the right place. I teach people to start with the financial planning aspect. You have to start with the financial plan. Skipping over to the sexy investment stuff without doing financial planning is ridiculous because I promise you, your emotions are going to get the best of you. Your emotions are going to make you make a bad decision. All right. That is guaranteed that your emotion will do that. Your emotions will do that. With a financial plan, maybe you'll be able to control your emotions a bit. You'll say, hey, my life's on track, right? I'm meeting my goals. I'm doing the saving. I'm doing the investing. You're not going to feel the need to try to find some shortcut with some guy that tells you that he's going to make you, 70% a year, or worse than that, 70% a month, right? Or worse than that, hundreds of percents a month. All right. Let me tell you how you know that that person's lying to you. If someone tells you they're going to make that kind of money, we were just talking about compounding interest. And I said, hey, look, the rule of 72, this is key. All you do is take the number 72 and you divide it by the interest earned, the capital gains earned, how much money you make. So if the number 72, if you're making 72% a year, your money's doubling every year. So this guy that's telling you that he's going to make you that per month, let's just say he makes that per year. Let's just say that he really did start when he's 22 and now he's 30 and he really is teaching you online. So he's 22 years old. He has 100 grand and he makes 72% per year. And most of these people are claiming they can do that per month. We're not going to talk about them. Just 72 per year. So his money flips every single year. And he has 10 years. He starts with 100,000. So here we go. 200,000, 400,000, 800,000, 1.6, 3.2, 6.4, 12.8, 25.6, 51.2, 102, 0.4. He has $102.4 million. And he never saved one nickel. He never added to his original 100,000. That's 72% per year. I have news for you. That doesn't happen. That's not real. That's fake. That's fantasy land. That's designed for social media to sucker people in, to get you to follow them, to get you to pay some $20 a month course. Maybe they get 1,000 people paying this $20 a month. That's 20,000 a month. And they sit in front of a screen and they show you charts, but this isn't real. This isn't reality. Hey guys, hit that like button if you're enjoying the conversation. I appreciate it, by the way. Anybody who does join and hits that like, I really, really appreciate it. I don't know who did that earlier. I was in the middle of a conversation and I was like riffing and I missed who did that for me, but I appreciate it. Thank you so much. So that is compound interest, right? At 72% per year, at 20% per year. And that's what I teach people. I teach people the foundation of finance. Now, do I think you should use leverage in your investing? Yes. I think, thank you so much for that like. I appreciate that. I like Gate. Thank you so much. I really appreciate those likes. So I teach using leverage the intelligent way. So someone says to me, hey, I don't own a home, or should I own a home? And I ask them, we go through like the initial conversation. If you're not a homeowner, should you own a home? Yes. Absolutely. That's the craziest question to ask someone, because that's an asset that you're going to live in, you're going to raise your family in, right? Or maybe that's the goal, maybe that's not the goal, but traditionally, I'm not talking about guys that are just telling you, oh, learn how to flip houses. That can be a profession for you, right? What's Nancy Pelosi going to buy next? It's funny. That's what a lot of people think you do. You pay attention to what Nancy Pelosi's buying. Here's the thing. You don't know what Nancy Pelosi's buying until 3 months after she's bought it, unless you understand how to use volume on a chart. If you know how to use volume on a chart and you understand how volume shows up, you don't need to hear what Nancy Pelosi bought or when she bought it, because it shows up live. It shows up as trading activity. Trading activity shows up as volume. Huge institutional traders, political figures, these people all do things at the same time. And you can talk about dark pools of money and hidden funds and hidden this and hidden that. The fact of the matter is, they can't hide when they place trades. Their trades show up in real time on a chart. If you guys want, and Gate, you should do this. You should go, and Tim, if you're still there, you should do this, and Brandon, you should do this. You should pull up a chart that just has price and volume on the Dow Jones and go look at it's December or the first week of January, December of 2021 or the first week of January in 2022, and tell me that you can't see the trading activity that indicated that we are headed for a major bear market. Trading activity, if it is up 300% on a weekly basis, if your trading activity increases by 100, 200, 300% in a weekly basis during the holiday season, I assure you, you are heading for a 20 to 50% bear market. And it was there in December of 2021, January of 2022. I identified it to all of the people that I work with, all of my students, everybody that's a subscriber or works with me. And it's not hard to see. It's as plain as the nose on my face. You just have to know what to look for. So for those of you out there that are interested in looking, please go look. If you think it's hard to see, please go look. Are grain prices going to go up? You know what? I would have to look. I'm in the middle of this conversation, so I don't know. If you would DM me so I don't forget, I will tell you what, I will go look at grain prices. If you have a particular grain that you'd like me to look at, like a particular commodity symbol, let me know. I will look at it and I will tell you exactly what I see as far as grain goes. It's just not something I look at, right? I look, the major commodities I look at, for a little bit, I was looking at cocoa because it was going crazy. But it's going to be like gold, silver, oil. Those are really the commodities I look at, unless like something comes into play. And believe it or not, chocolate, cocoa was like a major play a few months ago. So that was something that I looked at. But DM me and let me know if there's any specific you'd like to know. I'll happily take a look and let you know. So anyway, back to the conversation of leverage. So when we're talking real estate, the reason I like real estate is because you're putting money down on a home that you're going to live in, and it's the highest leveraged asset you can own, right? So if you put $50,000 down, on a $500,000 house and it appreciates at 5% per year, in 10 years, you've made $250,000 in appreciation on your $50,000 down payment. That's a 500% return. Now, for some of you out there, you say, yes, but I can't afford a home right now. I don't have a down payment on a home right now. I completely understand. I'm not telling you you should be able to. Affordability right now has gotten so far away from the typical home buyer that I wouldn't expect most of you could. And that's why I'm always saying that real estate is very fragile right now. There's certain things, there are certain assets, in almost all assets, to be honest with you, once they breach affordability, meaning once they're unaffordable to the public that does everyday jobs, specifically real estate, there's only one way real estate prices can go, and that's down. They have to come down so that you are able to buy it, which will drive demand, which will then again lift prices. It's simple supply and demand. Right now, it's so unaffordable, there's no demand. Prices have to go one way, down to you. My advice to anyone right now, and because we're talking about leverage, real estate is the most leveraged and usable asset you can ever have. So if the opportunity presents itself for you to buy a home, you buy one, because over the long term, it's a place that you live. It's functional for you every single day. And if you, again, if like, you can adjust these numbers, but if you put 50,000 down on a $500,000 house, the house appreciates at 5% per year. In 10 years, you've made $250,000 from your $50,000 investment. That's a 500% return over 10 years, everybody. That's pretty amazing. That's an average of 50% per year for a house. That's because it's leveraged, all right? Now, we also talked about the downside of leverage. And the downside of leverage is a bunch of people right now, they're going into futures, they're going into options, they're going into currencies, they're going into commodities. They think they can trade these leveraged accounts, and they don't realize that they're actually going to end up with a bill if they don't educate themselves first. You have to educate yourselves first. And so for any of you out there that are interested in actually learning some of these techniques, if you're trading options right now, for example, or if you're trading futures, I have someone that you can learn from. It's Vol Signals, okay? I have the QR code up there for everybody that is on Twitter or LinkedIn or Facebook or Instagram. Vol Signals. The coupon code is Derek, DEREK, in capitals 10. That'll give you a 10% discount. That is someone, he is an ex-market maker that focuses on the market maker's flows. Okay, so the flows meaning the options flow, and then what that options flow does to price on a daily basis. So for everyone on Twitter, if you go to volsignals.com and you use Derek10, DEREK, all in capitals 10, you'll get a 10% discount on anything over there at Vol Signals. It's an ex-market maker that teaches you all about the Greeks, all about options flow, where it's going on a daily basis, when a whale buys in, when a whale sells out. You're privy to all that information, and you're getting educated through Vol Signals and Vol Studies at a 10% discount if you use Derek10, DEREK 10. The website is volsignals.com. Ex-market maker, learn the flows and how it affects the market. If you are involved in options, if you are buying and selling options at all, you have to go learn from the guys that have done this for a living for a couple of decades. And there's someone that's done it for a couple of decades. So for those of you that are on my my live stream, I see a couple of people are clicking the QR code now. I'm going to go ahead and put that away for now. But if you are interested in that, that's where you go. And so the side of leverage that is bad, everybody, is that if you leverage your account, so you take your $1,000 and you trade it at 100,000 by going into currency markets or futures markets or options market, just remember, if that market moves against you, that market only has to move against you 1%, and all of your $1,000 is gone. You're now broke. Now, I can tell you that in today's markets, 1% is nothing, and happens like that. If the market moves against you 5%, you have a $4,000 bill. If the market moves against you 10%, you have a $9,000 bill. So these guys that are on these charts, especially these young guys that I see, these young kids that I see on the, showing you these charts, telling you to use leverage. I'm telling you now, Do not use leverage in your investing, not as far as a trader, not in currency markets, not with options, not with futures, unless you are well versed in this stuff. A lot of these guys that are teaching this, they were floor traders for 15 years. If you don't know what a floor trader is, it's basically a guy that goes in every day and has his heart squeezed as he tries to figure out how to make money in the pits. It's no joke. Market makers don't have it much better. All right. So these guys can teach you that stuff. That's not what I teach. What I teach is I teach you how to identify market tops and market bottoms. I teach you how to identify price targets, time targets, and how to avoid major bear markets. How do you avoid major bear markets? Because if you can avoid major bear markets, you can take the average return of 10% in the stock market. And that includes some crypto as well, by the way, for everybody out there. I definitely believe in investing in crypto, just so we're perfectly clear, as part of a well-rounded portfolio, obviously. But if you can simply avoid major bear markets, you can take that 10% return and turn it into 20%. And let me tell you something, a 20% return in the markets means that every 3.5 years, you're doubling your money. All right. Is this something that's possible? Because I was just talking about the fact that what these guys are talking about, or what these kids are talking about. Um, oh, I just lost my Twitter or my TikTok. That's okay. What these kids are talking about as far as what they're able to do in their investment and trading accounts is simply not true. That is just not the reality of the situation. They're not doing that. They can't do that. I've never met anybody that could do that. And that's why I share with you the math of somebody who's doing 72% per year. Because if you're doing 72% per year, you're rolling your money once a year. You don't have to start with much. You have to, what I start with, 100,000. In 10 years, you had 100 million and you never added $1 to your investment account. You think there's a bunch of people doing that? I mean, you're on the moon if you think there's a bunch of people doing that. But what you can do is you can avoid most major bear markets. And how you avoid most major bear markets is by identifying tops, like trend changes, areas of weakness. Really, when you identify an area of weakness, you get out of the way. So when greed is at its height, you get out of the way. When fear is at its peak, that's when you're buying. There's an old saying, when there's blood in the streets, I buy. Okay, there's a reason for that saying, but there's also ways to identify that. And right now, my intermediate trading, investing, and forecasting course, which is 4.5 hours of step by step instruction with me, right? It's video, it's not slideshows. I'm not talking over some slides. I'm talking to you just like this. I walk you through step by step how to evaluate price, how to evaluate volume, which is trading activity, how to evaluate gaps. So when there's gaps in charts, what happens there? How do you use those? How to identify time frames? So in what time frame the market should move there, and then how far price should go. And what you'll find is this is something that I can teach. If you simply ignore what you've been told throughout your life and allow me to teach you through that course, you will be able to identify major bull market beginnings, the end of major bull markets, the beginning of bear markets, and the end of bear markets relatively easily. So there's the coupon code, intermediate 95. Click on the QR code there, and you'll get to my intermediate trading, investing, and forecasting course. I have it. It's a 95% discount right now, only $100. That's going to run through Tuesday of this week at midnight, or once 1,000 of those courses are sold. Whatever comes first, that's what I'm doing. I do have one other course that I am offering quite the discount on, and that's my Invest Like a Pro course. In this course, I take you from someone who doesn't know anything about investments. I teach you about the history of Wall Street. We get you set up with a financial plan, all the software for that financial plan. I walk you through how to create a financial plan based on your life, based on what's happening with you. It's Monte Carlo simulated, meaning that it's going to give you a probability analysis of your success. We know the stock market has returns in differing orders, so it's going to mix the stock market up 1,000 times. It's going to mix your life up 1,000 times, and then it's going to give you the probability of your success. All right. The next thing we do is we talk about where should you be putting your money in regular IRAs, Roth IRAs, SEP IRAs, individual 401ks, trust accounts, individual accounts, custodial accounts. Then how to set up an account how to place a trade, and how to fund the account. Oh, and then how to rebalance the account. That is 7.5 hours of video tutorials. It is a 70-page step-by-step workbook. It is 25 years of knowledge lumped in to a 7.5 hour course that you are able to get at a 95% discount at $23. Same deal as the last course. It is only going to last until Tuesday at midnight or until 1,000 of these courses are purchased, whichever comes first. All right, so I think that's going to be it for me for now. Let me see. I don't know what time it is. I have just been talking today. Let's hide that. Let's see. I think you know what. That's probably going to be it for tonight. I want to thank you all for joining me. I will see you bright and early tomorrow. I will be live pretty continuously over the next 3 days as I'm trying to get in touch with as many people as I can. I want people to start setting up proper financial foundations through this Invest Like a Pro course. And I want to take you to the next level in the system, which is how to identify major market turns so you can protect your money when you need to.